spending habits of Gen Z. They're always labeled as reckless with their money. Would you think they are irresponsible or they manage their money?
I don't think the Gen Zs are irresponsible. I think access to money has become easier.
What do you think the Gen Z is going to completely reject, which our probably parents' generation were doing in terms of money savings or money management in general?
That was the whole scarcity angle, right? And at that time, it was almost about you should save, you should think about the future, and so forth.
It's cute that if you could help every young Indian unlearn just one money myth, what would that look like to you?
Don't wait for the next time that you can do something. Don't think about, okay, if I could save and then do it, it'll be better. Do something for your parents today. Don't wait till you think that, okay, it's a bit expensive and I can do it after some time.
So you think equity gives better returns, say, than real estate investing or investing in startups or stock markets? Would you say that? Welcome to Breakthrough Moments with Priyanka Bhatt. As always, we try to bring in inspirational and very unique stories of young leaders and startup founders. Today, we have with us a very unique and interesting startup, SuperMoney, which is a SME-focused working capital platform which has partnered with 30,000 retailers across 40 locations. The company plans to reach out to 500,000 MSMEs within the next 2 years and drive invoicing volumes in excess of $5 billion on the platform. I have with me Nikhil Banerjee, who's the co-founder of SuperMoney. So let's hear his journey in terms of how he's built his startup, understand of how he's doing things differently to build his platform. Nikhil, very happy to have you on my show.
Thanks so much, Priyanka. Really looking forward to the conversation.
Thank you for being there. So Nikhil, let's go back to the beginning and let's understand what made you believe in terms of what was broken at that point in time with Indian MSMEs or enterprises needed, and which made you believe that a fintech company like a working capital platform would really work for a country like India?
Sure. So I think, I would need to dial back the years a bit for that. So perhaps a decade or so back, I used to be on the investing side. And obviously, given the growth pattern in India, what we were doing was taking calls on companies that were offering products to customers, whether it be in industries such as banking, whether it be financial services, whether it be education, pharma, and so forth. A consistent pattern that we noticed even then is that, the largest companies, the largest corporates in India have the banks pretty much lining up for them for all products. But when it comes to their larger ecosystem, whether it be, a mom and pop shop or a kirana store, or an MSME who's been in business for 15, 20 years, what we realize is that, it's really difficult for these players who understand their business inside out to get easy access to capital.
Right.
And often it's not about the risk so much as the perception of risk that, should we even give money or, give them that flexibility to be able to build their business. And having seen it on the other side of the table, that was an inflection point saying that, if the companies that we work with or we invest in are corporates that themselves have very, very large ecosystems. Now, the corporate has easy access to money, whether it be debt or equity, but the ecosystem does not. Then clearly there is something missing. And so as we kept on digging deeper and deeper into that, the realization came that MSMEs of any kind that are building today in India, right? There are two things that they need money for. You need money today to start a business, where often what you would do is you would dip into your family savings or you would have friends and family, you give money. Yeah. But more importantly, as you start the business, it is that day-to-day requirement of working capital, as we call it.
Right.
And that is not easy to come by. You can start the business, but you often get stretched in the terms of the goods or the inventory that you can keep with you. Because typically what happens, and if you go into what is a B2B transaction, you have a buyer and a seller. What does a buyer want? He wants more time to pay. What does a seller want? He wants the money today. Yeah. Right? And fundamentally, there's a gap there. And our argument is that with the evolution in terms of technology, GST initiatives by the government, it is becoming easier and easier, or at least more transparent for us to be able to understand the quality of the business of that MSME. What is he buying? What is he selling? When does he earn? How does he earn? How much is cash? How much is online? And arguably, if you have that pattern, it gives you a reasonable insight into the credit quality of that potential borrower. And that's really what SuperMoney is looking to solve for. How do we reach out to more and more MSMEs, help them grow faster, sell more? Ultimately it helps uh, pretty much even the largest enterprises, because these MSMEs are their backbone. And so yeah, that's what we do.
Can you give us an idea of what are the kind of MSMEs you tie up with? So, is there a particular revenue that you look at when you onboard these MSMEs on your platform, or is it for anybody who has even a small turnover, say as small as say 1 crore? So, what are the kind of segments you cater to?
Sure. No, I can keep talking about this all day, to be honest.
Yeah.
MSMEs for us span the entire coverage. You're right that I think at the lower end, it would be MSMEs or, mom and pop stores that do maybe 1 to 2 crores of revenue on an annual basis, and goes right up to maybe somebody who does even 400-500 crores of revenue. Right? They in turn are part of what we call the supply chain of a larger corporate.
You call that supply chain financing.
We call that supply chain, precisely. Right. So, if you take, for example, say FMCG, right, and we took, say, Coca-Cola, right? All of us walk into a store and just say Coke dena or a Diet Coke dena, right? Now that Diet Coke can has had a certain journey. It has Coca-Cola, which is the branding entity, which gets it manufactured by what's called a bottling entity. Now that bottling entity may be based in, I don't know, Nagpur for Maharashtra, but needs to reach you and me in Bombay. Now the way it happens is that the moment it goes out of the bottling entity, it lands up with what we call a distributor. So you would have some large distributor in Maharashtra, somewhere on the outskirts of Bombay, to whom there would be trucks of Coca-Cola cans coming in every day from the bottling unit. That distributor in turn will sell those cans to the kirana stores, mom and pop stores, to the large chains, to the restaurants. And it's when you and I go and order a pizza at Domino's, we say Diet Coke de dena uske saath. Or when we walk into a kirana and we say, give me 2 cans of Diet Coke. So it's that journey. There are a series of transactions that keep happening between the bottling entity to a distributor to retailer, and ultimately from retailer to us.
Right.
So each of these transactions, if you will, represents a buyer and a seller. And at least one of those legs is an MSME. So you would have Coca-Cola bottling entity selling to a distributor who's an MSME, a distributor selling to a retailer where both of them are MSMEs, or where you and I walk into a store to buy from the kirana, which again in itself is an MSME. And at each of these legs, there is a requirement for capital. Right? And so depending on the industry, depending on the nature of tie-ups that we have with anchors, or what is our go-to-market strategy for that industry, we would offer solutions either to the distributors in this case, or to the retailers. There could even be industries, for example, we work a fair amount in something like steel. And, you could have a small manufacturing entity which is making stainless steel utensils that you and I would use at home. Now he builds the utensils, you need to supply him, he recovers the money over time, and he requires working capital. Yeah. So the examples are numerous. Pretty much every industry or anything that we use in our daily lives, it touches these kind of transactions.
Yeah. So I was reading about your company where you had mentioned somewhere that you cater to industries like auto, manufacturing, and pharmaceuticals as well. So are you restricted to only say 3 or 4 sectors, or are you pretty sector agnostic? And does the service change in that sense from industry to industry, because every industry's requirement is a little different?
True.
Of course, but the working capital solution at the platform still remains the same, where you're trying to provide working capital to MSMEs. So in terms of sector specific, I'm trying to understand, is there a change in terms of the way you look at different businesses depending on the sector, or it pretty much remains the same there?
No, that's a good question. At a very basic level, right? It's basically somebody's buying, somebody's selling. So you're right about that at the core of it. But each industry has its own nuances. Right, that in some industries, an MSME needs to buy a lot of inventory and liquidates that slowly over time. In something like pharmaceuticals or FMCG, you pretty much are churning your entire inventory every 2 weeks. Depending on the industry, the way that we go and build a program or a go-to-market strategy changes. There are some industries where we are spending a lot more time today relative to others. It's not that that there are hard no's. But at a given point in time, you look at it and you say, I would focus on certain sectors and go deep, build deep, engage with large enterprises, engage with their entire pool of small businesses, right? Because it in turn allows us to have a better understanding of the nuances of that sector and be able to serve for it. So
Right.
theoretically, one can be, in every sector and for every MSME,
Yeah.
but practically you choose your battles and then you slowly expand from there.
Yeah. So, which industry, according to you, is the most hardest to sell to?
Well, I think every industry is hard and every industry is, relatively easy. I think going in, go in with a thesis, right? And then you iterate. I'll give an example that all of us talk about, say, FMCG and Kirana stores, right? Now, today there are many push and pulls. On one side, we have the Blinkits and the Zeptos of the world talking Q-commerce. And then I read some article that, they are taking away demand from the Kirana store, right? Because late at night, if I'm going and opening and getting that order of Coke, somewhere I think, oh, I should have bought that Coke by just going downstairs. Am I not getting lazy? And then somewhere else you read that, Q-commerce even today is a very, very small percentage of the overall volumes that are happening in, say, FMCG, right? And so as you get into that industry, as you engage more with the brand, you start realizing what are those nuances to solve for. So, going in, yes, there might be some industries we think are easier to do and some are more difficult to do, but it's really as you go in, you discover what are those sweet spots that you can really solve for.
So, what I wanted to ask you is was there a personal experience in your own life that pushed you to solve for this? Because you mentioned that working capital, loans can be used for any type of industry, whether it's a 1 crore business or whether it's a 400 crore or a 500
True,
crore business.
true.
So, was it that any personal experience that really pushed you to do this, or it was more that you saw a market gap or a need to solve for a problem like this?
So I would say not so much as a personal experience as much as a professional experience, because when I was, I had a stable day job, if I can call it that, was when we were investing in companies, and some of the industries that we had invested in were FMCG, fashion, pharmaceuticals, where you would have large brands which distribute through mom and pop stores, right? And a continuing, I would say, limitation to growth of the brand was that, oh, I need to sell more and I think I can sell more. My goods have demand, but the stores can only buy so much because there is in turn a cycle beyond which they can't stretch themselves. And so then when we would ask them, okay, but why don't you offer credit? He's like, no, I have to sell today, so why should I give credit? Then the next question was, okay, why doesn't a bank offer credit? Right? And so the brand would come and say, no, I get all the credit I want. But to that MSME, he's small, right? And the whole point or the chain of thought at that point was, small doesn't mean risky necessarily, right? Small as long as, it's a business that has adequate economics and it is, driving outcomes for that mom and pop shop or that MSME, it's perfectly fine. And one should be able to underwrite, estimate, analyze that business and be able to extend capital. And so I think it was really that argument, if I can call it that way, in terms of the thought process that led us to where we are today.
Right. So, can you run us through the entire customer journey, right? From the time, say, the person comes on your platform.
Sure.
What are the sort of services he can or benefits he can avail from your platform?
Sure. So I think, like I mentioned, our core solution is working capital, right?
Yeah.
And so typically the way that we acquire our customers are through partnerships. We would go and work with, say, large brands. For example, we run an interesting program today in mobile phones where we partner with some of the largest distributors for Apple. And they in turn sell Apple phones to mom and pop stores where you and I can walk in and just buy a i15 Pro or whichever is the latest one that is out there. Right? Now, what would happen is that typically we would first go and partner maybe at Apple India or at the state level distributor, who in turn can be a reasonably large entity, right? And then it becomes sort of almost like a strategic discussion that what are today your growth plans. If you're growing by 15% next year, what do you think would it take for you to grow by 20-25%? And then the anchor comes and says, if I could offer more better payment terms, if I could offer better credit into my ecosystem, I think I would be able to sell more. And we say, okay, if that's the point, I think we may have something to solve for you. And then the next step becomes trying to analyze their ecosystem, the kind of MSMEs that they sell to. And then you create a program for them. So this is the first part of what we do is almost consultative. right? It typically is about getting into that industry, sitting with those players, understanding the nuances, creating a program based on certain assumptions and understandings that we have. From there, you go and start onboarding the MSMEs. Now, typically these days, a lot of that has become digital and therefore far easier. So either it would be the anchor zone sales team on the ground who we just give an app to be able to onboard, extract key data, linked to GST, banking, their offtake with the anchor and so forth, payment cycles that they follow today. Once that comes onto our system, we would analyze and be able to suggest a credit limit. Typically, credit that we give is linked to the offtake or the purchase cycle of an MSME. If, for example, somebody is going and selling 5 lakhs of Coke a month, right? And Coke's argument is that if he had proper credit terms, perhaps he could even sell 6 lakhs, 7 lakhs, or 8 lakhs. What we would do is that we would give maybe a little more limit than 5 lakhs, but less than, say, 8 lakhs. Let him get the habit of using credit, be able to establish a payment pattern. So you give, maybe instead of 5 lakhs, you give 6 lakhs, you give 6.5 lakhs. You track how they do offtake, how do they repay, and you keep on enhancing limits, right?
Yeah.
So that's the first phase of what we do.
Yeah.
The second phase of that then becomes that once the customer comes on board, you try and understand what could be those other requirements that they have. That mom and pop shop has one store. He needs to do repairs. Okay, do you need a more long-term solution for that? And we'll offer you that. We notice that, on your inventory, there isn't insurance. So tomorrow, in that 0.001% chance if there was a fire, it would impact your ability to service this loan. So why don't we offer you fire insurance as well, or inventory insurance and so forth? So the whole aim becomes that you bring that whole ecosystem onto the platform, and then you analyze and you keep on seeing what could be relevant solutions for them. So the first stop is always working capital, and then you try and go deeper and mine or work with the anchor and the customers.
Depending on their requirements, their challenges,
Precisely.
their needs.
Exactly.
And then finally giving them a customized solution for
Pretty
that.
much.
So who are your biggest competitors in this space right now?
So financial services, theoretically, everybody is a competitor, right? And it's a question that I'm faced often saying, what you're doing, why can't a bank do it? Right? Now, the point is that India has maybe 100 or so reasonable sized banks. It has a few thousand NBFCs, right? And yet, when I'm sitting and talking to you today, we work with some of the largest corporates in the country. We work with their set of MSMEs, and we have pretty deep, engagements with them. So clearly, one is an assumption around the fact that, there are a lot of players trying to solve for it. And the other becomes the reality of how we go about it, right? So when I have to look at competitors, right, I would say that, my competitor is HDFC Bank, and so is, say, new age fintechs, right? But what I've realized is that in financial services especially, there is no real winner takes all. Each of us take a strategy or a slice of the market. Because what I've realized is that in an economy like India, right, everybody's talking about how quickly do we hit 5 trillion going to 10 trillion and so forth. Financial services has more than enough room, right? All of us look at it and say, can I get my disproportionate share of value? How do I build a 2,000, 5,000, 10,000 crore book? How do I service my pool of customers, right? And I think, therefore, when I talk to somebody, I look at it and say, practically speaking, right, it becomes difficult to pinpoint a single competitor, right? But theoretically speaking, there are tons of players, right? But each of us have a different strategy. And so, therefore, it doesn't limit us in any way when we're trying to go about our execution.
Yeah. Now, I would love to know, as founders, we all make mistakes in the journey of building our own businesses. So, what is that one decision that got you wrong in the early days while you were building SuperMoney that ended up teaching you something very important?
Oh, made a lot of mistakes.
Yeah.
I learned the hard way. I think in hindsight, perhaps one of the early things or the initial things that we were doing when we started out was that we tried to go a bit with flavor of the month approach. What I mean by that is that we started our journey before COVID, right? And at that point in time, the gig economy, the Uber, Olas, Udans of the world were pretty much, growing massively, right? And so when we first built our solutions, we built it targeting asset owners, fleet owners, say on the Uber platform or Ola platform or Swiggy and so forth, right? And in hindsight, right, if we had spent a bit more time delving into it, we would have realized that arguably the target market that we're trying to go after is perhaps not as large. And second is that in terms of the stability of the market, it is not as high, right? And COVID pretty much brought that home for us. And so, the business that we do today, it takes a lot of learnings from where we started off from, but it is reasonably different as well. And that is perhaps one of being the key learning, that when you're starting off, you think of what is shiny and trying to go after that. But honestly, durable businesses are built doing the hard stuff that not everybody is really willing to do. I think we are trying to do some of that and doing that well today.
Right.
And I wish that I had that thought process when I started out.
Right. And what are, like, when you're talking about money, right? Money is often the biggest source of a lot of issues or stresses in people's lives today, right? So, how has working so closely with money changed your personal relationship with money itself?
So, that's a thought-provoking question. That see, my relationship with money has always been in 2, 3 different steps, right? Because the day job, even before entrepreneurship, used to be around managing money. What I always did was perhaps have a slightly different relationship with money professionally and personally. When I look at personally, I just have 2 approaches. I'm either high risk or highly conservative. Right?
There's no middle ground.
There's no middle ground. And but when it came to business, right? Today you try and ensure that you take calculated risks, right? Or when we were even on the investing side, that was an approach. You would always try and ensure that you were on the right side of risk, right? I've noticed that when it comes to personal capital, right? I, like a lot of other humans, tend to get swayed by what seems attractive. Right?
What seems glossy?
What seems glossy,
yeah.
right? And then, but what I have done at least over the years is ensure that even if I'm getting swayed, I'm not putting all my eggs into one basket, right? Because at the same time, some of my, I would say, biggest wins, if I can put it that way, have also come from what looked glossy or was potentially high risk. So the way that I approach it now is that majority of what I do with my own money tends to be a lot more conservative, right?
Okay.
Which is not to say that that I don't invest in equity and so forth. Honestly, I look at it and I say that when I was young, right, I should have just put every single rupee that I have into equity. Right? And today when I meet somebody who's say 22, 23, 25 just starting out, I tell them, don't look left or right. Ensure that you put your savings into equity. Keep it simple. You can put it into mutual funds, you can put it into large cap stocks, but do that, right? Because over long periods of time, given that it's not that India is going anywhere wrong. Yeah, in some years we may grow at 7%, and a lot of years we'll grow at 10%. But when you look at it 10 years, 15 years later, right, I think the kind of returns that equity gives, right, is unparalleled, right? And so that's one thing that I think I should have also done, even when I was younger, that just put every penny into
So you think equity gives better returns, say, than real estate investing or investing in startups or stock markets? Could you say that?
So
equity?
see, equity or stock market investing, the simplest way is you just, there used to be this ad, buy it, fill it, shut it, and forget it, right? And I think that holds true here as well. That I'll give you a simple example. That when I first started work, right, in the first year, there is always this, you have to do your tax filing at the end of the year, and I had some little money left because obviously I went bonkers first time that you have money in hand and salary and you save very little. And so what little I had, I put into what was called a tax saving mutual fund. And I forgot about that for the longest time. And I think maybe 15 years later, when I saw it had grown 12x. Right? And I think the smartest thing I did was forgetting about that money. Because if I hadn't, then if I had grown 3x, I would say, Acha, let me just sell this and do something with it. And I think that is really the way to go. You just put money into perhaps the index, right? And forget about it. Or you do a reasonable part. So if somebody has to invest or save 100 rupees, maybe 50, 60 rupees you just put into something like this. You put it in an index stock or into reasonable mutual funds and don't look at it.
Yeah.
You take the rest of the money that you have, and then out of that, yes, you want to invest in some startups. It's a fantastic way to potentially generate returns, but also learn about what is happening new in the market, right? But you do that with a little bit of your corpus.
Yeah.
You do that with 5 rupees, 7 rupees. It should be okay that even if it went to zero,
Right.
so be it.
So that's where the calculated risk approach.
That's a calculated risk. And the balance you do into debt, real estate, and so forth, kind of thing, right?
Yeah.
Because real estate also comes with its lead time, right? You'll develop, you put money into an under construction project, may take time longer than expected. Cost of maintaining homes can be different, right?
Yeah.
Capital gains may or may not come to the extent you want. But I do believe that over long periods of time, the probability of equity giving you those stellar returns are better.
Yeah, awesome. You also mentioned just a couple of minutes back that some of the high risks, decisions that you took actually worked for you in your business. Some obviously you took calculated risks, but you're a person as in either you take high risks or you don't take any risk at all. So, what were some of those high risk decisions that you took have really helped you to grow SuperMoney or has changed the way you think about leading your business today?
One of the interesting things there is that uh, when I took those calls I thought were high risk was actually around people.
Okay.
And what I mean by that is that, when we were building our careers, right, it was all about, okay, you get somebody with the best credentials, right? So, when I did my MBA, it was about, okay, get into the best MBA possible. Then you try and say, okay, get into the best job possible and so forth, right? But when we were building our business, the risk, if I can put it as a risk, was taking people with what you thought were capabilities or taking people for their strengths rather than for where they came from or for their credentials. At that point in time, people were like, why don't you just take 3, IIM MBA guys and just build it with it. In hindsight, that was literally the best risk to take, because what you took were people who were hungry, who were capable in doing the kind of thing that you needed them to do. Right. And I think that really allowed us to be able to build a platform, because these were folks who came in and joined and said, listen, I think I would love building this with you.
So it wasn't the educational qualification that you saw, but it was the capability, the mindset
pretty much
that you actually.
Yeah.
Oh, that's
It's a very different
insightful
way of thinking about risk, because I still remember people coming in saying, why would you want to do that, right? And it's not that I didn't have questions saying that, okay, do we want to build our teams in a certain manner? Hindsight, it pays off.
Right. Also, very curious to ask you, fintech is a very dry industry. It's very numbers heavy. When was the last time you made a decision purely based on gut that actually worked for your business?
Okay. So, gut-based calls, are surprisingly often. Often, right? And it can be small or large. For example, you're releasing a feature, right? And you think that this should work, right? Or you take a call around, say, extending credit in a business, right? The numbers may not show that, but you think, that person has 20 years of experience in this industry, has just started and building a business. He is in an area where, his reputation matters. Maybe the financial numbers don't show it, but I think the anecdotal evidence shows that he could actually be a good credit. Let's take a call. Every day, different aspects of what we do, there is some calls, small and large, that are being taken.
So you feel your gut-based decisions are higher than what you would rationally make a decision for your business?
No,
or it would be a fair balance of being rational?
From a percentage perspective, gut-based decisions may be far lesser. All I mean is that, it happens a lot more often than one would normally think.
Got it. Also, I would love to ask you that if you could help every young Indian unlearn just one money myth, what would that look like to you?
So, okay, I think, I don't know if I can put it out there, but the one money myth, or rather the life myth, is that don't wait for the next time that you can do something, right? That if you have an opportunity in front of you, do it today, right? Don't think about, okay, if I could save and then do it, it'll be better, right? I don't mean that in terms of pure consumption kind of things. I mean that in terms of life experiences. Take that trip today. Don't think that you can travel 3 years later just because you save that money, right? Or do something for your parents today. Don't wait till you think that okay, it's a bit expensive and I can do it after some time. So the one thing that I to my younger self as well as others is don't wait.
Don't wait. Just chance upon, if you've got the opportunity, just act upon it.
Act upon it, because again, what I mean is that don't spend or don't be a spendthrift. But at the same time, when it comes to decisions or experiences, right, doing them earlier. So, for example, I decided that I wanted to travel, right, and I still remember that I went for the Athens Olympic Games in 2004. We didn't have much money, and so me and a friend, we stayed like 1 hour outside Athens on the hot sand in the beach because that was the cheapest thing we could do. It's 20 years later, but it's still one of my fondest memories. It allowed us to connect with people that we are in touch with even today, right?
Yeah.
It allowed you to be able to see the sheer spectacle of the Olympics.
Yeah.
It allowed me to see Leander Paes in a match and cheer with his family, even though on the losing cause, and those are memories. And if I had thought about it and I said, oh, if should I go and spend so much money and so forth, I wouldn't do that. I wouldn't be able to open up my mind. And I think that's something that I really encourage everybody.
Yeah, and especially for the younger generation, right, who is trying to hustle every day, in the name of hustle, trying to do a lot more things and trying to put, I think with the younger generation, they try to put those boundaries and stresses themselves,
Correct.
especially for the entrepreneurs who are coming out
True.
in their 20s and 30s, I would say. So that's a good insight, living in the moment and just doing.
Completely. I mean, do that bungee jump, take that travel.
Take that risk.
Yeah, take that risk.
And if you were to design, a curriculum for Indian schools, a finance management curriculum for Indian schools, what are some of the must-have topics you would like to add to the syllabus today?
So I think when it comes to money, getting kids understand the concept of money earlier is very valuable. Like my son's 13-year-old, right? And so what I was discussing with my wife was that should we just allow him to understand what stock markets are, right? It doesn't mean that he should just go and trade every day kind of thing, but what is a business? Why does it grow? What does it need? Right? Why is it that some companies are very big? How did they become big? Right? There are a lot of life lessons around money that one can learn. Right?
Yeah.
I think understanding what are savings?
Yeah.
Why should you save? How does that help you over time? What is insurance? Right? There could be some things that depending on the age of the child, one starts exposing them to. And I think a well-structured curriculum around money will be very, very valuable. Because otherwise what happens is, for example, take me. When I started my career, I really didn't have a clue about how to manage money or what does it mean, right? I didn't have money and then suddenly I had money. So I spent all of it.
Yeah, and I think the Indian schools don't equip you enough to have those life lessons early on.
True.
I think that's completely, there is a missing gap, clear gap there, where they don't teach you about financial literacy or...
Oh, 100%. I think
savings,
the earlier
money
we can
savings.
start doing that, right? There are so many, I would say at least some of the myths that used to be there before. For example, even when we were growing up, equity markets are bad, stock markets are bad. You lose money, why would you want to do something like that, right? Completely not true, right? And the earlier one is able to understand balance, right? What is risk? What are sensible risks? What is savings? What is earnings? It helps.
Right. Also, Nikhil, this show is a lot to do with the founder's personality. So we try and bring out those aspects of leadership and how you really lead and inspire your team. So can you tell us a little bit in terms of, say, an unexpected thing about you, an interest, a personality trait, or it could be a past job that surprises people about you. Can you tell us a little bit about that?
So, my past jobs have all been very cut and dried. It was all financial services. But I think things about me that I try and do, for example, I've realized that as an entrepreneur, right, there are a lot of stresses that come on to us daily, right? And I've realized that fitness really helps me manage a lot of that. And so that's one thing that I try and not compromise on is that ensuring that I put in those hours at the gym. Right? And whenever I go, and often I used to tell people, it's like, acha, but time can't milta hai, kind of thing. Right? And my point is, those are precisely the kind of things you make time for. Right?
Yeah.
Even as an entrepreneur, what you don't want to do is, say, compromise on the family, right? Which
Absolutely.
unfortunately we tend to do quite often, and compromise on your health. Because
Yeah.
ultimately, if you're trying to do something, you're trying to build and achieve it for a certain reason. And if you're not, well mentally and physically,
Yeah.
you're impacting it in the long term. And so those are things that I really put a lot of weight on.
Awesome. And are there any sort of inspirations? You draw inspirations from people. We often draw inspirations from other leaders. For you, who would be your biggest inspiration while you're building SuperMoney?
So, honestly, there are people who inspire me literally every day or second day.
Yeah.
Right? When you come across, say, a MSME or a small business and the way that they build that business,
Yeah.
right, without access to capital, right, building it with strong profit margins, offering product that is pretty much among the best in the world, hugely inspiring. On the other side of the scale is, say what large Indian entrepreneurs have executed on. Obviously, very inspiring. But I think inspiration pretty much comes from all walks of life. Often it could be a piece of music,
Yeah.
right? And you're like, it has a crescendo, and you're like, boss, it just charges me up. It really inspires me to get through the day,
Yeah.
kind of thing. Or a good gym session, and you're like, boss,
Yeah.
I'm really going to crack it today. So there are so many things that I've realized. So increasingly, there isn't perhaps one singular business person kind of thing, but I think there are a lot of experiential things or moments that I find really inspiring that allow you to power through the next set of hurdles. And so that's really the way that I look at inspiration. That often you're stuck.
Yeah.
Right? Is there a piece of music that helps you unlock your thinking around that? Can you go and read something not connected to business that allows you to start thinking about that?
Yeah.
Often those are the kind of things that really help me or inspire me to break through.
Yeah. So, is there a song or perhaps a book that has stayed with you, or a learning from a book or any song that has helped you in your toughest days while you were, starting out or building?
Honestly, the books that help me the most are asterisks and obliques.
Okay.
The reason for that is that I've been reading them pretty much my entire life. And every time I go back and read it, I find there are more nuances to it that I missed. Reading it at 15, reading it at 25, reading it at 35, reading it at 40.
Interesting.
Each time I found, wow, why didn't I realize that? Right? And I think what that told me also was that when you're sticking to things through life, right, there are going to be some things that are realizations or takeaways that we take in. And so the flip side of that is what I've realized that entrepreneurship is a grind. The longer that you go through that grind, right, the better actually you get at things. And I'm seeing that increasingly in our business as well, that say compared to even 3 years out, or 3 years back to today, when we're sitting with enterprises, when you're trying to figure out what happens in your industry, when you're trying to sit with an MSME and offer a solution, we are better today than what we were 3 years prior. And I think we would be better 3 years from now. Right? And I think a lot of it really comes from that, right? Being able to stick through things.
Yeah.
As an entrepreneur, otherwise, there's always an thing, it's not working. Should I do this? Should I do that? There are so many crests and troughs that come in.
Yeah.
I've realized that, pushing through, if you really believe in what you're trying to do,
Yeah.
is just the ultimate experience.
Yeah, and I think a whole lot of this also comes through leadership, like how you lead, how you inspire your team to follow.
True.
Because it all comes from top up approach, right? Because if you have a good hierarchy in terms of the way you lead your company, I think it helps you a great deal. So, what is your leadership style or leadership mantra, and how do you really, set those sort of parameters, benchmarks in the company for people who are below you?
So my leadership style has historically been more, okay, this needs to be done, I'll do it myself, right? And I think increasingly what I'm learning now is also to delegate, is to see that how do we empower our teams so that they can just pick up the gauntlet. Because till now, what I used to always do, the first reaction would be, okay, this is not working or there's an issue here. Let me sit down and do it. Right? Increasingly now, what I realize is that from a longer term perspective, it's better that you help others think through how to do it. And I think that's a key change in my personal leadership style that I'm now trying to implement.
Right. What do you think of hustle? Because as entrepreneurs, we always have a hustling mentality, and sometimes it's kind of overused. Like, we're all hustling to do something or to get that next best promotion for a corporate or somebody who's working in a corporate environment. Or as an entrepreneur, you're always hustling to do better deals, get better partners, or get a better product or a better system. So, what does a hustling look like? Do you think that's a very overused word in yourself, or is there any practice or that has helped you not to hustle? So, what sort of a trait do you look at while you build?
So, if you ask me, hustling is very important. I think two, three things. One, that willingness and inclination to hustle on one side also means that you're never going to sit quiet, right? You're always going to see, okay, what is that next better thing that I can do or our company can do and so forth, right? And so I think an element of hustle, speed, urgency, impatience in what we do is important, right? It ensures that, see, why do you hustle? You hustle because you're not satisfied with what is there. You hustle because you think there is something that is achievable if you put in that effort or you go and rush behind it and so forth, right? What people often think is that by hustling, perhaps, at every point in time, you're really missing out on the way that you should build a business. I think of it slightly differently, right? There is an element of hustle that comes in from drive. And I think that is important. And I think it's important not to let go of that, irrespective of what scale you get to. So for me, the right kind of hustle is pretty much basic hygiene.
Yeah, no, so true. I completely resonate with that too, because I've been running my own business since the last 10 years, I think. And the hustling mentality that comes with pushing the envelope every single day, going out of your comfort zone. For me, that is hustle, right?
Absolutely.
Doing something
Absolutely,
new.
correct.
And not just sitting in one place and just being happy with what you have. So I truly resonate with, I think, what you're saying. If you could give, one piece of real, unfiltered advice to your younger self, right before you started SuperMoney, what would that be?
Start out earlier. And this goes back to something I said before, right? Financial services is something that you don't need to touch, right? Or, see first that. And therefore, I keep thinking that, if I had to start earlier on the entrepreneurship journey, right, then one would have already been, more impactful than one is today. Right? So that is something that I would tell my younger self. Right? The other is obviously that the importance of balance. Right? What I mean by that is that on one side, well, we just talked about hustle. The other side of it is you hustle on one side and you keep on saying, what are we achieving? Right? And then you reorient based on what is that you're doing, right? Because otherwise what happens is that we are always gunning for the next thing without realizing that what we have built before, is it, foundationally strong or not?
Yeah.
Right? Because often what happens is that we think about it and we say, okay, how do I grow 30, 40, 3x, 4x, 5x kind of thing? But if the foundations are not strong, right? And so especially in our kind of business, which is about, our business is about managing risk.
Yeah.
Right? It is not about avoiding risk, or rather, and neither is it about just saying taking risk. It's about managing risk, right? And so at every point in time when I'm taking risk, I need to pause and see, are these the right risks I've taken? How are they doing? Now let me go and take the next set of risks, if I can put it that way, right? And so I think that applies for every business, that you have to have that balance. On one side, you are pushing the pedal. On the other side, you're trying to see how far have you traveled, right? And are you on the right direction or not? And then you push the pedal in the direction that you need to. Right. And that balance is critical.
No, that's very interesting, because with hustle comes the balance as well. So I think that's a very interesting point that's got me thinking as well. Very interesting point that you brought out. Do you think, Nikhil, while you were building SuperMoney, how has your relationship personally with money changed, or over time, has it changed? I know you touched upon that in the earlier part of the conversation about your emotional relationship with money,
Yeah.
but has it personally changed for you as a person um, after running a company?
So I think my relationship with money changed when I moved from a 9 to 5 to a 24/7 kind of thing, because the comfort that comes from knowing that there'll be a credit in your account at the end of the month versus knowing that it is your efforts that will drive whether a credit comes into your account fundamentally changes how you think around money. And I think I appreciate a lot more as to what you could do with that money, right, than before. So I think that's been the most critical change.
Right. And because when you're in a 9 to 5, you know that you have the comfort of the check coming into your account.
Correct.
Vis-a-vis, I think you paying salaries for 100 people or,
Yeah.
it's very different. So I think that mindset shift is also needed, because when you come from a corporate mindset, a mentality of, hey, I have a 9 to 5 and my check is coming
Correct.
every month on the 30th of every month, vis-a-vis now I have to pay 100 people. So I think that's pretty
Oh, it's
interesting to
huge. But
understand.
interestingly, I can't now imagine going back.
Yeah.
So, because once you have come onto this side, once you've gone through the rigors of that, once you've also seen the independence that it brings to you, both in
Yeah.
the way that you think and you act,
Yeah.
it's very difficult to go back into a more,
Yeah.
rigid kind of life.
Absolutely. Now let's talk a little bit about the spending habits of Gen Z. They're always labeled as reckless with their money. And today, Gen Z, when you associate Gen Z or the millennials, as I may call it, they're always for spending more rather than saving. So, do you think they're irresponsible, or do you think how do they manage their money, and what's your view on the Gen Zs of today? Of if you have to give an advice to them, how
So
should they
I don't
manage their
think the
money?
Gen Zs are irresponsible. I think access to money has become easier, right? That, say, for example, whether it be at our parents' time or our time, right? That access to money was not as simple, right? So I think to some extent, the relationship that they have with money is fundamentally different, because it isn't about scarcity, right? It is now about that, okay, it's not that I have grown up thinking that, oh, okay, money is precious, blah 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 kind of thing. Now it's about, okay, you want to go out today, you can go out today.
Is that, abundance mindset versus the scarcity
Pretty
mindset?
much, yes.
Right.
Right now, obviously, what happens is that when you are transitioning from an abundance mindset into a scarcity mindset as an economy,
Yeah.
there will be excesses. I think that's the way. I don't think any Gen Z guy or girl looks at it and says that, okay, I'm going to spend beyond my habits. You look at it and you say, okay, I've never had to think about or worry about money, and now it is easily available, right? And so then at times you are spending more than you should, right? So I don't think it is so much generational in terms of spending habits as much as an scarcity to abundance kind of transition.
Got it. And if you talk about Gen Z, if you had to design, like, say, a money management app for them, what sort of features do you think it needs to have to drive their attention more?
So I think if you were talking about money, and I think honestly, going back to AI, I think a lot of Gen Z should today just go and create a money management app for themselves. And what they should do in that is be able to just put in a few points around, are you studying? Are you earning? If you're earning, how much money do you get? What are those critical must-do spends that you always have? For example, I need to go to college, and therefore, maybe I'm going by train every day, and so I have a pass, right? And you say, okay, I'm getting, say, 5,000 rupees, whatever I'm getting as a monthly thing from my parents, right? And so, okay, if I'm getting this much, there are some minimum fixed spends that I have. And then it should be able to tell me, okay, if you have these kind of spends, the weekend is coming up, perhaps you could go and watch the new Fantastic Four movie and have a pizza. And you're good to repeat that for another 2 weeks. But if you didn't do that and you did XYZ, then, this week is all you have. If I had that kind of insight going in, and that's possible now with technology,
Yeah,
it would
absolutely.
fundamentally change how I would interact with money.
Oh, that's really interesting. And if you talk about Gen Z, what are some of the money truths you think Gen Z hasn't fully grasped yet, but really needs to before it's too late?
See, I think it is just this that because it's become easier to have money, what you also need are ways to communicate with them in the way that they find it easy, right? Are, for example, if everybody's on Snap and on YouTube Shorts, then we have to communicate with them there, right? Around money as well. It has to be in the language that they relate to, right? And if we do that, right, it's merely about getting the point across. Growing up, when I didn't have so many things to grab my attention, and I was sitting at the dinner table, I had to listen to what my parents said.
Yeah.
And I would absorb, okay, be careful about your money.
Yeah.
Right? If today, when I am scrolling through YouTube Shorts or Insta Reels, and I was able to get an engaging way to learn that, I would pay attention. And I think it's merely about how we communicate, because what we're trying to do is replicate how we used to communicate 20 years back with a generation for whom communication fundamentally has changed. So for me, I think it's really about how you want to get the point across.
Yeah, and it's interesting that you said that, because our money spending habits were very different for our parents' generation, right? So if you had to talk about how the spending was happening, say 20 years back to now, how it's changed, what do you think the Gen Z is going to completely reject, which our probably parents' generation was doing in terms of money savings or money management in general?
See, I think, like I said, that was the whole scarcity angle, right? And at that time, it was almost about you should save, you should think about the future, and so forth, kind of thing, right? Today, to some extent, it's already been about experiences in the moment and so forth, kind of thing. And so, if you start telling somebody you can save for the future, they will just not relate to it, right? And so, rather than that, what you can communicate about is a balance. Right? You say that you go and overindulge, it will impact you tomorrow, day after. You want to go out today and tomorrow night, and you're going to spend $2,000 each night. You'll not be able to do it next month, right? I think that is more helpful than saying "ye mat karo." Telling people that, and I've realized this is true, whether it be for kids in terms of money management, whether it be in business, whether it be what we do, right? You tell people a reason for or an impact of by doing this, what it does to you is far more impactful than just saying no.
Yeah, I think you give them a reason behind why a certain thing is done a certain way.
Correct.
Because I think today's people learn very differently. Today's kids learn very differently.
Very differently.
Yeah. So if you were to turn financial education, say, into a Duolingo style experience with a lot of gamification and habit forming, what would be your first 3 modules there?
So I think first 3 modules would be, to talk in the language that the user can relate to, or about the things that they can relate to, right? So perhaps just a simple, a module of swipe left, swipe right on, do you understand this kind of thing? Interest on money means it's interesting. It means that you earn something. Yes, no, kind of thing. You just get people into it, engaged by doing something that's very familiar with them, right?
Yeah.
So I would start. One is more from how you communicate to them or you get them into the thing, right? You would start with what is it that they commonly associate money with, right? And then perhaps go into more concepts of money. Because if today I started with concepts of money, which could be more drier, so to speak, in terms of content or what you're engaging them with, you may lose interest very fast.
Got it. So what's the next 5 years at SuperMoney looking like? What are some of the new things you're building right now at the company, and what's the future looking ahead for you?
So, see, I think the future is exciting. That at the pace that India wants to grow, I think it is critical that the access to capital and the access to the right kind of capital and the access to the right kind of capital at the right time is critical. And hopefully we play a role in that. Yeah. And I think over the next few years, what we want to do is to, engage more deeply, one, obviously with the MSMEs, but equally with all the anchors of the corporates that we work with. Right? What we want to be is like an extended arm for them.
Currently, how many corporates do you guys work with?
So in total, I think roughly around 50 odd kind of thing. And this includes pretty much some of the largest names in, commodities, in electronics, in FMCG and so forth, right? And so hopefully we go deeper in the existing sectors and add in a few more sectors, right? And I think what we want to do is really be a partner, be a trusted partner, so that, enterprises that we work with look at it and say, okay, SuperMoney, you come in and manage supply chain financing programs for us, right? And allow us to focus on the day-to-day job. How do I arrange my finances? How do I build better? How do I sell better, and so forth? And SuperMoney takes care of that whole flow of financing required to enable all of that.
Yeah. And how would you like people to view you, say, in the next 12 months? Are you planning to take any sort of initiatives in terms of partnerships that you're looking at? Of course, as you said, that you're looking to extend your services to more enterprises.
True.
But how would you like people to know you, say, 12 months down the line?
See, partnerships are critical. I think
Yeah.
the way I've always thought about it is that, as startups, what we can solve for is product, right? But what is critical from a long-term perspective is solving for distribution, right? And while there are multiple ways you can go about it, that either you spend giant amount of money getting to distribution or getting to the kind of market size that you want to get to, or you look for kind of partnerships that allow you to be able to get to that. What I mean by that is, we are looking to say partner with software platforms that service MSMEs, because that's something they may be using every day, right? So how do I partner with those kind of software? So basically, perhaps say an invoicing software, a GST software, somebody say theoretically even WhatsApp, right? Because that's something that an MSME uses every day, right? By embedding or engaging along with such partners, right, we would be able to reach out to a far larger portion of the MSMEs than trying to do it bottom up or trying to do it one enterprise at a time. And I think so that's something interesting that we are exploring
Because
now.
it gives you a skill, right? Because partnerships, it gives you
Yeah.
that sort of skill.
And
to
it's a
reach out to
win-win,
more
right? I think ultimately what I realized is that in any relationship, right, unless you solve for a win-win, it's all short term.
Yeah.
And so therefore, how is it that we can be part of the positive flywheel of partners across different segments who ultimately service or solve for an MSME? I think that's what we are gunning for.
Got it. And any fundraising plans currently you guys have?
Always. I think, in financial services, it's the raw material. So, yes, I think in the next 12 months, you'll see us being fairly active on that side.
So, Nikhil, since this show is called Breakthrough Moments, right? I'd love to understand your perspective that in the journey of building super money, what was that one breakthrough moment that you've had in your journey that has changed the way you think about your business today?
So I think the first breakthrough that we had, I remember, was getting the first enterprise customer, right?
Okay.
Because from when we started out, and first we had an assumption about what we can do, and it was useful, right? And then we had the first enterprise customer, and so when we started out pre-COVID, that first enterprise customer was Uber, right? And then we started solving for their ecosystem, and that was my first aha moment that you thought of something and it is relevant enough that pretty much one of the largest logistics platforms in the world agreed with that when you are a relative nobody, right? So that was the first moment that injected a huge amount of energy to just go ahead and build, right? I think from there, effectively what we have done is that each, I would say, quantum step that you take. So, for example, the first time that you raise capital and you realize that, okay, there are believers who are actually willing to put money behind you. Massive breakthrough, right? Post COVID, moving from, say, a gig kind of businesses to offline, and again being able to work with some of the largest enterprises, right? Those are the kind of things that each point in time, what I've realized is that it also gives you that injection of confidence, right? It to keep on building, right? Because entrepreneurship otherwise is an arduous journey. It's often lonely and has its own challenges. But
Yeah.
these are the kind of moments that you say it's worth it, right? And so the way that I have looked at it is that honestly, where we are today are because of a series of breakthroughs, right? That have allowed us to be where we are today, to have the impact where we do today. And even as we grow 10x, 50x from where we are, there would be breakthroughs that perhaps I don't know of today,
Yeah.
right? That will allow us to,
Yeah.
get to those
Awesome. Yeah.
steps.
No, that's a very valuable insight. So, what is a long term vision for the brand that you have, say, next 10 years, 20 years? What have you envisioned for the brand?
So, a decade out, we would be a multi-country platform solving for, the go-to platform for small businesses to grow. I think that's the way that I look at it. We would still be in financial services. But what I hope to do is to be able to add more solutions around what can help a small business. I think the use cases are numerous.
Yeah.
I think what we do today in India resonates a lot with a lot of other emerging economies, and hopefully not. We won't need to wait for the next 10 years, but in the next few years, we hope that we'll be able to expand our wings beyond India.
So, what are your top 3 lessons that you'd want to share with our viewers?
So I think the most important thing I've realized is that irrespective of what we are building, who we are building with is hugely important. Having the right kind of people with you on the journey, there's nothing else more important. And I've seen this being proven repeatedly over time.
Yeah.
So I think that's something that when I started out, I didn't realize the importance of. But today I have a deep appreciation for that. So I think that would be the first. The second is favoring speed over perfection. As a startup, I think we are meant to break things, right? We are not meant to just be able to solve what is or fix what is broken. And often what happens is that we ourselves think, okay, perhaps is this the right thing, etc. Honestly, we don't know, right? But as a startup, right, it is important to be able to get your product out there in the market and be able to get real feedback. That will tell you what's missing. That will tell you how to get to product market fit. So I think that's the second thing always. Speed of execution for me trumps perfection of execution the first time go. You will reach perfection if you are fast enough. But hoping that you will reach perfection the first time is a very, very tall ask. I think that's the second one. And the third realization that I have is also about the fact that, you can't do everything yourself, right? As an entrepreneur, often what happens is we tend to, keep things to ourselves. That ability to delegate and let your team members take over, or be able to communicate with everybody, right? As to what are the things that we are doing, what are things that I want you to do, and so forth, is very important. These are 3 things that, the right people, speed of execution, and the third is communication and letting people know what and empowering them. I think those are game changers. And I think the best companies out there just manage to get those 3 right every time. And even the largest of companies. So today, if you look at, say, even the largest tech companies, the speed of execution, they come out with features every week, every month at their scale, right? They have people who are empowered, who have the flexibility and the freedom, even when, the decisions that they take could impact billions of dollars, and giving those rights, right? And the third is just getting those right people in. I think that's amazing.
Thank you for being on the show.
It's
I
a
think
pleasure,
it was a
Priyanka.
very insightful discussion, Nikhil.
I had fun.
Thank you for your time as well. Thank
Lovely
you.
speaking to you, Priyanka. Thank you so much.
So that was Breakthrough Moments by Priyanka Bhatt. If you've liked Nikhil's story and if you could resonate with his story, follow us on Instagram, YouTube, and LinkedIn to know more such inspiring stories of young leaders and entrepreneurs of how they are building their business. Till then, stay tuned, stay curious, and stay inspired.